Hello traders, Gary Wagner here for Trending Markets. It is Friday. Happy Aloha Friday, as we say on the islands. November the 6th, 2015, and we have had a dynamics job report come out. Initial estimates at about 180,000 new jobs added. Actual numbers, 271,000. Dynamic moves. We saw the dollar just on fire. We'll look at that chart in a second. We had the equities markets, which had a knee-jerk reaction to that. We'll have to look at some of the intraday work so that you can see how the market came down at the beginning, but it certainly rallied at the end. And we had the Dow Jones Industrial Average climbing higher, 17,910.33, up about 46 points on the day. Now, what it did to our trade that we had yesterday, of course, which was in the E-mini S&P 500, we got in, of course, at 2068. We kept trailing our stops up, and yesterday, as of yesterday, we had our stop at 2080. And if you recall from the special trade alert that I sent out, I said, go ahead and take that stop to the market. So we got in at 2068. We got out at, call it 2093, a very, very profitable and nice trade. And here's what's interesting. Had we simply kept our stop, the low of today was 2077. We would have gotten stopped out at 2080. Market had a high of 2099, closes at 2093.75. It closes in essence unchanged on the day. And the beauty of that is we can re-enter the market, but we pulled profits from 68 to 93 rather than getting stopped out at 80. And now the market's at 93. I absolutely feel as though the particular move that we made in the market was absolutely warranted. And we do have this market continuing to move higher. As you can see, we're tracking green all the way, and I do believe that we will see this market trade higher next week. But I do want to take a look at the dollar. Incredible move in the dollar, up 1.25% plus. And you can really see the move in the dollar reflected by this day's activity, this single candle here. When we look at it, you can see that the market was trading under 98 on the open, close over 99. And so these series of tops that we were looking at as potential resistance, because realize that on yesterday's market activity, that's where it closed, matching these tops here. Well, we absolutely barreled through those points, and the next real level of resistance does not come in till 100 on the dollar index, and that of course is based upon this activity that we saw in early April of this year. Now realize, traders, the dollar's been much higher in terms of the index than 100. However, to see those points, we've got to start looking back to 2002, 2003. I've gone ahead and compressed the chart. Let me show you what I mean. The number that we were looking at, which is 100 on the dollar index, you can see that that comes in here. And as I said, if we take a look, that came in, of course, as this market had that extreme rally in July of 2014 and trades up to 100. You can also see quite easily that there's an absolute void of trading in this particular price point for a multitude of years. And as I said, we've really got to compress the chart to be able to find points in which it went above that. Now watch this. This is a weekly chart, but if we start to compress it, you will start to see some of the absolute highs that we saw. Now there is a 140 that goes back in the dollar index, but that was quite some time ago. But right in here, you have 120 on the dollar index. This, of course, being 100. And the reason that I bring this up is that when we look at these shorter term studies on the dollar, you know, it appears as though this is kind of an aberration. We've never seen the dollar index at this high, when in fact, starting at what, 1999 up till about 2000, 2001, when we hit this triple top, that's when we saw the dollar lose an incredible amount of value in 2002, 2003, 2004, 5, 6, all the way down to 2008, and that's where it hit these bottoms at around 72 on the dollar index. Since then, it had made a new high. That new high came in roughly at about 90, and then now we took that out earlier this year, had this congestion area between 95 and 97, and so when we put that into perspective, 100 now seems a whole lot more achievable than when we were just looking at a close-up of this moment in time, meaning just the last year or so. So now that we've actually gone and pulled profits on our Standard & Poor's trade, the question is, what's next? Now, my sense is we look at these record tops up here just above, call it 21.35 in that area. Then about 21.25, we're sitting at 20.93, so we're just shy of that. But my sense is that now that we've gotten a correction out of the way, of course we had this major one right in here, and of course the August meltdown that we're just recovering from, we are now back at pre-meltdown pricing. And my sense is that all things being equal, with the economy being as strong as it is, and the fact that we went back and added 271,000 jobs, a very respectable jobs report, we could see this market go and tackle not only 2100 and 2125, but I personally think that we are going to go to new all-time record highs. This has been Gary Wagner, wishing you as always good trading. We certainly got it this week. We'll talk to you on Monday for another daily update and review. Bye-bye.